Right, welcome everybody, and a happy new year to you all. 2020 was one hell of a roller coaster ride for investors, but in many cases, especially if we look further afield than the UK, the market recovery was exceptionally strong. I suppose the big question on everyone's lips right now is whether or not markets can continue to post strong returns in 2021. And to answer that question, I'm joined by long-standing master investor contributor, Victor Hill. Victor, welcome to the show.
Hello, James. Happy New Year. Good to see you.
Same to you. We're going to dive right into the questions in just a moment, but just to say, we hope to take some questions at the end. So please do keep them coming in the chat function during the course of the webinar. I'm sure many of you are used to webinars by now, but with this being a live webinar, we do encounter technical difficulties from time to time. So please do bear with us. Right, I'm just going to share my screen with everybody so everybody can see the slides. Okay, Victor, just give us a bit of a background as to where we are with the pandemic, because this kind of colours a lot of the rest of the discussion, doesn't it? Because to an extent, the trajectory of the global economy depends on the course of the pandemic, doesn't it?
Well, it does. I mean, this is the overwhelming backdrop to the investment environment in 2021. And I know we don't want to spend too much time talking about immunology, things which I'm not really qualified to speak about. But it's worth saying that we did a webinar back on the 22nd of April of last year. You hosted it, James, and I was on a panel with Jim Mellon and James Ferguson. And the main theme of that talk was that we had just passed the peak of the first wave of the pandemic in the United Kingdom, and something very similar was happening elsewhere and in Europe and North America. Now, that was late April, and there was a reasonably smooth reduction in the level of both hospitalizations and therefore morbidities. And then we had this almost idyllic summer where people started to go on holiday again, and life got back to relative normality, although lots of social distancing and new ways of going out and enjoying the hospitality industry, eat out to help out, and so forth. And then we ran into September, and cases started to pick up again. And of course, we had a second lockdown from, I think it was 5th of November to 2nd of December. What we didn't know, that during that lockdown, or probably towards the end of it, a new strain of the virus emerged, which we were only able to pinpoint in the 3rd week of December. And that may have originated in Kent. And I've got a piece coming out tomorrow, actually, in which I conjecture how that actually arose. But the point is that this this new strain, the so-called Kent variety, has propelled hospitalization levels and infection levels to new highs. Now, I don't want to get too much into the numbers, but in terms of mortality, on the face of it, the second wave is graver than the first. And indeed, this graphic only goes up to the 14th of January. So that's, 14 days ago. The highest number of daily fatalities was recorded in the UK on the 20th of January at a level of 1,820 deaths. Although there's a health warning on these figures, because a lot of them are aggregates of previous days' unrecorded fatalities. So you can't actually say that number of people actually died on that day. But notwithstanding that, that was the highest number of daily deaths recorded since this whole pandemic first came to our shores back at the end of February last year, beginning of March. So where we are now is that there's quite strong evidence to suggest that, in fact, we've now peaked in the second wave, and that hopefully, mercifully, hospitalizations and fatalities will begin to decline from here on in, both here and elsewhere. And we can start to think about a return to relative normality, albeit that I'm of the view that we will never get back to the world as it was pre-COVID, because it's fundamentally changed us and the way that we do business and the way that we invest. But the target date right now, as the Prime Minister announced yesterday, is March the 8th, when schools will reopen, and this particular lockdown will end, or at least it will be relaxed. That said, we should be aware that there are all kinds of other mutations coming onto the scene. There's the so-called South African variant, the Brazilian variant, which I'm also talking about in my piece tomorrow, which is particularly concerning because there is evidence that having had COVID before doesn't give you immunity to the Brazilian variant, and that's very worrying. So therefore, there are a lot of unknowns going forward. As always, we don't know if a third strain might produce a third wave of the virus and we will go into lockdown once again in the autumn or the winter. Professor Whitty, the chief medical officer, has conjectured that we probably will need further lockdowns. And no less than Bill Gates, who has a lot of access to immunological modeling, has suggested that we'll still be going into periodic lockdowns next year. So I know that you're very skeptical.
There isn't, Victor, in the form of the vaccine, and it does seem that up to now the evidence suggests that the vaccine is effective on these new variants.
Absolutely, and the vaccine, there's very good news on the vaccine front, particularly in this country, in terms of the speed and the efficacy with which the program is being rolled out. Some concerns about that in Europe. We'll have a look at a slide on that shortly. That will certainly drastically reduce the level of morbidity, and particularly in the most vulnerable sectors. The point is that even with a relatively successful vaccine rollout, even if we hit the target of having vaccinated more than 50%, all the over 50s by Easter, the virus will continue to circulate. And that's not me being pessimistic, that's just a virological fact. And we still don't know yet whether vaccination, although it will stimulate immunity, whether it actually stops transmission of the virus from those who have been vaccinated to those who have not been vaccinated. So I think there's a lot of reasons to be optimistic and hopeful, and there could well be a renewed consumer boom in the summer months. At the moment, there's no way we can even think about our summer holidays abroad, but that could change. The point is that there are so many variables in this that we just do not know that that will be an end to the pandemic. And furthermore, the virus will probably continue to circulate almost indefinitely, but it may mutate into something much less lethal, and even though it will remain contagious. So we will have a small number of deaths from COVID-19 going forward almost inevitably. But when you consider that, you know, in a good year, we have 7,000 people in this country who die of flu. In a bad year, it's over 20,000 who die of flu. We just learn to live with that and get on with it. And I mean, the other point I would make here is that I doubt if one shot or even two shots of the vaccine, whether it be Pfizer or whether it be Oxford, the Oxford vaccine or Moderna or any other, will be sufficient. I suspect that we will go into a world in which we get an annual coronavirus vaccine in addition to the annual flu jabs that many people have.
And just looking at the current slide, obviously the UK has done really poorly in terms of deaths per capita, if we believe the statistics.
Yeah.
But obviously the UK government, I'm guessing, is hoping to redeem itself in terms of the vaccine rollout, which has actually been very, very good up to now, hasn't it? If you compare it to European peers in particular.
the UK is definitely ahead, and not before time in terms of the vaccine rollout. I mean, it's going pretty smoothly. But what I just want to say about this slide is that it's very fashionable right now to emphasize how poor the UK mortality figures are, as expressed in number of deaths per million people per million inhabitants. There are certain parts, the BBC is absolutely terrible about this. I mean, every morning they rub our nose in these figures and remind us that we're the worst in the world. But what I would like to say is that there are different ways of calibrating these kinds of data, and it depends on how you record deaths. And I know, I won't mention any names, but I know that certain countries have very different practices to ours, which may underreport the number of deaths. So the thing I would take away from these figures, I mean, this is actually quite recent, that's 25th of January. If you look at the leading developed countries, so UK, France, Spain, Italy, and the US of A, they're not dramatically different. You have some outliers in terms of Europe. You have the Czech Republic, you have Slovenia, San Marino, a very small entity, probably with certain intrinsic factors there, who have higher levels of mortality per million inhabitants, even on this basis. But I think as we get to the end game of the pandemic, I don't think the UK's performance will look as bad as it does now. And I think that that will have political implications. I don't think that the government, the UK Tory government, has screwed up as much as people imagine. And I think that probably at the end, in hindsight, we will consider that there are many things that they did right. The biggest mistake, in my opinion, and I know that this is controversial, not everybody will agree with me, is that they did not close the borders sufficiently early. Now, if you look at the Asian countries, I don't know if you, I've got, looking at Japan, 40 deaths per million people, South Korea 26, Vietnam 4, and then you go to our friends in Australia and New Zealand. They closed their borders almost immediately. They hermetically sealed their countries, and their strategy was to eliminate the virus by not allowing it in the first place. And that has worked. And I'm afraid that there is a lot of evidence now that this government allowed people who were carrying the virus to come into the country at a critical moment at the beginning of the first wave, and then again, possibly at a critical moment at the beginning of the second wave. So we know that the Brazilian virus arrived very quickly, having been identified in about the second week of December. By Christmas, it was already endemic in the UK. And of course, they finally closed the border to Brazil, to the whole of South America, to Portugal. And there's an ongoing debate going on about whether the country should effectively close its borders completely. So that is a policy issue which people will come back to.
So
now,
Victor, the $64 million question is, when is the vaccine rollout going to be sufficient for us to reach herd immunity so that the economy can begin at least to get back to normal?
Well, again, there are many variables there. One is the efficacy of the vaccine itself. Now, I'm sorry to share with you that some of the Israeli data, which is extremely robust and reliable, suggests that the Pfizer-BioNTech vaccine is not as efficacious in creating immunity as the original trials suggested. So if it doesn't work quite so effectively, there will always be a number of people who get infected regardless of having had the vaccine, 1 shot or 2 shots. And there's a big argument, as you know, going on about whether it's more optimal to give the largest number of people 1 shot before you give people the 2nd shot. And that's another conversation we can have. But it also depends on whether the virus remains relatively stable or whether it continues to mutate. And of course, we have no idea about that, except to the extent that, given that it has mutated significantly at least 3 times, there are probably quite a few other mutations out there of which we are not aware. And no doubt it will continue mutating indefinitely. The good news is that the BioNTech people are suggesting that this mRNA technology can be tweaked and modified in response to new genetic variations that become apparent. So that's another reason why I say that there's not going to be one vaccination program. We're going to continue to be vaccinated for the rest of our life, or at least I am, James, for the rest of my life. In terms of performance, well, these figures are 10 days out, but the relative performance hasn't changed significantly. And as you can see, you've got these small, well, Israel is a very small country with an extremely sophisticated healthcare model, digitized health records. They've and of course with their extraordinary experience of military-civilian cooperation, they've excelled. They are the benchmark. You've also got these Gulf rich states, which have UAE and Bahrain, which have been able to act very dynamically. Then you've got the UK. The US is lagging a bit behind us, and then you've got the Europeans, of which notable are the French, who, though, anecdotally they have a superb superb healthcare system. They're actually at the back of the pack. So that's I don't expect that situation to change. I think the UK will achieve its target of vaccinating all of the most vulnerable over 70s, that's 13.5 million people, by the middle of February. And as I mentioned, probably all over 50s by Easter. And I think that's some achievement.
So just to sum up then, Victor, I think even in spite of that, you're still quite bearish, aren't you? Because you're still expecting a very patchy economic performance for 2021. And in some cases, some sectors you don't expect to recover at all, do you? Like, for example, aviation. So just give us a run through in terms of what you expect the implications to be in terms of the economic performance going into 2021, and what sectors we should be looking at.
Well, in terms of aviation, I'm very bearish indeed, because I just don't think that we will confidently be able to travel overseas to Malaga or wherever it is in the summer confidently, and knowing that airports and aeroplanes are safe. It may well have been, in hindsight, the spike in foreign holidays which brought back a lot of virus to the country, which then precipitated into the rising curve in September. We don't really know. But I mean, looking at the airline stocks, I just, I don't get it with, for example, Ryanair, which, the share price suggests that they're going to get back to their previous capacity, within the foreseeable future. And I mean, I think that there will be a permanent knock-on effect in air travel. In fact, I actually predicted, even before anyone had heard of COVID-19, that air travel had peaked in early 2019. And one of the reasons for that is increased environmental awareness, and also because the airport experience is so negative. It's just not fun anymore to fly. So hospitality, well, hotels have had a terrible time. Restaurants a terrible time. I can imagine that by early summer, it will be possible to go to a restaurant and check into a hotel. I think UK hotels will benefit from an increase in staycations. I think a lot of people will spend their summer holiday at home or within the UK. I mean, unfortunately, there's going to be a lot of collateral damage here because, I mean, I think I read 6,000 licensed premises had actually closed for good by the end of 2020. And they're probably not coming back. I mean, some of them may renew themselves. So there's going to be a huge fallout in terms of hospitality. I mean, sorry, what was the other sector you mentioned, James?
It was just the aviation sector that I mentioned specifically.
Yeah.
Yeah.
No, I'm very bearish on aviation, on airlines, but I'm bullish on space. As we'll talk about that later.
Yeah, we'll be getting onto that one later. Right. Just to move on then. So, obviously, one of the really big changes in 2021 is the new US president.
Yeah.
What are the implications for the technology sector? Because obviously, Democrats, you would expect them to be more likely to regulate. But then again, Silicon Valley is very pro-Biden. So how's that one going to play out, do we think?
You're absolutely right. There's a paradox here, which was that Mr. Trump loathed the big billionaire technocrats of Silicon Valley because he regarded them as, West Coast liberals, and he opposed their social agenda. But at the same time, he was aware that America's preponderance in the field of social media gave the country enormous clout in terms of soft power and influence in the world. And he didn't really want to upset the balance and to do anything that could damage Silicon Valley or the social media titans. In contrast, Mr. Biden and the people who surround him are much more politically in tune with the Zuckerbergs, the Jack Dorseys, and so on and so forth. But their instinct is that Silicon Valley social media has got too much power, and that at some point it must be restrained. Now you can come at this problem from either political angle. I mean, it just struck me that excuse me, it's all very well for Twitter and Facebook to cut off President Trump's right to express himself, whatever you think of his opinions, whether you like them or not. But it's rather ironic, isn't it? That the president of Iran can continue to tweet or through his proxy with his opinions. So, who gets to decide who can express themselves or not? There's a very fundamental issue there. If these platforms, as they call themselves, are going to start censoring people, then who gets to decide? And there should.
Your opinion then, Victor, of these tech giants, have they become too powerful?
Well, they have effectively become enormously powerful, but at the same time, I think there's a lot of people who are over-egging the conspiracy theory angle. A lot of people on the left seem to think that everybody goes online and reads the QAnon announcements, whereas in fact for most of us, and I'm sure you and me, we go on, click on Facebook, and what comes up on our wall are articles from the Guardian or the Daily Telegraph, which is actually mainstream media, just managing to broadcast itself through other means. So the idea that social platforms, social media creates extremism may be true at the very margins of a very small number of the population who are subject to somewhat rather peculiar views anyway. But if you start to censor and to control what people look at, you're going to affect the very large number of people who have sort of reasonably centrist opinions. Perhaps they differ from some mainstream political parties in some ways, and you're going to somehow stymie the free flow of ideas and of the marketplace of ideas, which is what I thought social media was all about. And so what I'm saying here is that this whole issue of how do you regulate, how do you control, how do you mediate social media is going to become one of the dominant themes of this year and the next. And
so
what I'm
you accept that, more regulation is kind of like a done deal in the 2020s for the tech sector. What are the implications for investors in that space? Are there going to be a lot of headwinds? Should we be,
yeah.
maybe looking a little bit further afield than the fangs, as it were?
Yeah, I think there will be more regulation, but we still don't know what kind of regulation it will be. What I think will happen is that I think Biden is much more on the same page with the European Commission and those people than is commonly understood. And I suspect there will be some degree of collusion in terms of America and Europe in terms of the final package of regulation that emerges. And of course, we don't know exactly what impact that will have on FANG stocks until we know exactly what they have in mind. I mean, there's technology and there's technology. I mean, I think Facebook and Twitter are obviously social media platforms. They could be regulated in a different way from Amazon, which is essentially, a digital retailer using, or a data company and a cloud computing company. So I would be very loath to say, FANG stocks will fall because of regulation. It's much more subtle than that.
Okay. Right. So moving on to valuations, are markets at risk? Do you think, given the current level of valuation, especially for the US market, which has been on an absolute tear?
Well, let's talk about the FTSE a little bit later, but let's just look at the New York markets. The popular wisdom, 1 year ago was that if Trump loses, the stock market would fall and some crazy Democrat would take over and cause a market sell-off. Well, that didn't happen. In fact, the US markets have continued to power ahead since November the 3rd and its aftermath. So what is going on here? Well, on purely valuation terms, if you go by valuation models, as many of us do, the US markets are crazily overvalued. I mean, if you look at enterprise value to EBITDA, price earnings, which is you've got here in this slide, price to cash flow, price to book, dividend yield, on any of those valuation models, the current valuation of the three main indices in New York is somewhere between the 90th and the 99th percentile on a 50-year basis.
To what extent, though, Victor, is that skewed by the impact from the tech companies, which are traditionally very highly valued anyway? So in what sense is that pushing up the mean, as it were?
Well, you're absolutely right that there are still some cheap stocks. If you believe in cheap stocks, if you believe the market sometimes undervalues, just as it is possible, as it sometimes overvalues. So the cheap stocks are really more in terms of financials and energy and consumer stocks. But what we're looking at in the index is the overall average. And of course, you're absolutely right, James. You have a situation where 5 or 6 tech stocks account for an enormous, is it 25% of the market capitalization of the NASDAQ? So therefore, anything that happens to those major stocks is going to swing the market in one way or another. And hitherto, it's been upwards. So I haven't done as yet the exercise of taking out the FANGs, the tech titans, from the market and seeing how it's valued without them. But I think in the round, we've got a situation where the market is very much to the top of its range. And I think on other bases, we see the S&P 500 is currently valued. It's one standard deviation higher than its 200-day rolling average. So right now, those three markets are very highly valued. But let us look at this in terms of the context of the macroeconomic situation, and in particular, the monetary policy. We've still got a wall of money coming in to the system from the Fed in the US, in the UK from the Bank of England, in Europe from the European Central Bank. There's a whole lot of quantitative easing, which is still going on. Furthermore, you've got the outlook of a fiscal stimulus. In the US, Biden is talking about pumping 1.9 trillion more into the economy. Each American citizen is going to get a check for $1,600, which they're going to be encouraged to spend. So that's why these numbers are as they are. If you took out of the equation monetary policy, if monetary policy were different, if the Fed were to turn off the tap, the markets might very well adjust themselves in another direction.
Okay.
So that's also the subject of the next slide, really, because what has happened quite recently, certainly end of last year and in January this year, is that we've seen a rebound in US Treasury yields. And I think that is caused by a sell-off in treasuries. Some of the bond funds are unloading treasuries. And the most likely reason for that is that inflationary expectations have increased. So on various metrics, it looks like the market expects inflation to rise as high as 2%.
The Federal Reserve has indicated its willingness to allow inflation to run higher, hasn't it, for longer? So
that again comes back to monetary policy. Exactly. Now, at the same time, because stocks are so highly valued, the dividend yield in the equity market has fallen. So what we have, which I hope is exemplified in this slide, is a situation where the relative attractiveness of equities over and above bonds is narrowing. And so at one point, obviously, with bonds yielding almost nothing and equities paying decent dividends and having attractive capital gains, equities were the only game in town. If that differential narrows, obviously, that doesn't, the logic doesn't work anymore. So there is a possibility that there will be a market correction at some point if that trend continues. On the other hand, if the Fed continues to pump money into the system at the current rate of knots, then probably equities will remain very, very highly priced and possibly even rise somewhat higher. So it really depends on what you think the monetary outlook is. I mean, just by way of one metric, in March, that was the beginning of the pandemic, the Fed pumped 1.6 trillion into the US economy. And it was 140 something billion last month. So the rate of money printing is still proceeding at an extraordinary level.
And if we accept that inflation is likely to move higher, should we be looking at value stocks, which are, traditionally tend to outperform in periods of higher inflation?
Yes, I think so. I think there's some evidence of a move into value stocks at the expense of growth stocks. And that is exactly as you suggest, something that you might expect.
Right. So politics, a lot to talk about there. To what extent does politics have the capacity to blow markets off course, do you think?
Well, I look at politics, obviously, from an investment perspective, to the extent to which bad political mistakes can spook equity markets. But normally, in the short term at least, politics normally impacts the currency markets on a day-to-day basis, except insofar as major changes in policy can obviously initiate new investment trends. Now, looking at the fate of Mr. Trump first. The issue here is whether Mr. Biden and the Democratic presidency turns out to be a blip in a longer history of populism. And whatever you may think about Trump and his way of governing, which was highly unorthodox, shall we say, there is a huge support base for him and for his style of politics in the US. And it's particularly centered on the middle states, the states in between the coast, and particularly in the middle classes, the people who feel that they have been most disadvantaged by globalization. And what was interesting about the election, I mean, we all foresaw that Biden had a very good chance of winning because all the opinion polls suggested that he was well ahead. But in fact, Trump did much better than many people expected. And I was expecting him to do rather well. I thought that he might actually pull it off and win. But just consider that he got 11 million more votes in 2020 than he got in 2016. And the people who support him seem to have very high levels of devotion to his person, such that it's almost been called, it's been described as a cult. So Mr. Trump is not going to ride away into the sunset. He's going to be the king over the water for at least a few more years. And that begs the question, what happens to the Republican Party? Does it regress to the norm with the right of center political clans, the Bushes and so forth, attempting to retake control of the party, or do the populists seize power long term? So the main political tension is going to be within the Republican Party itself. That said, just to go back, just to finish on Biden, the truth is that Biden is really right of center. He was chosen as a safe pair of hands, someone who would not frighten the horses, whereas he is surrounded by a lot of people who have very radical views, particularly on things like wealth taxes. Now, we know that one of the themes of his presidency is going to be climate change, and that he's going to pursue a green agenda. He's also moving, as I predicted a while back, towards what we here might call an ethical foreign policy. And I note, I learned this morning, he's cut off arms supplies to Saudi Arabia. But the real issue in his presidency is whether those people within the administration who want to go for wealth taxes as a corollary to more rigid regulation of social media will get their way. And by the way, I think there's going to be a similar story in the UK in terms of the need to restore the national finances, possibly by going in the direction of wealth taxes.
Yeah, so lots of political upheaval in the US, but also, Europe's got its own troubles. I mean, here in the UK, we're a bit of a pariah, aren't we? Especially in terms of as far as the stock market's concerned. So, just give us a run through on what we might expect in Europe for 2021. Well,
two things happened to suppress the valuation of the London market. One was, of course, the uncertainty around Brexit, and the other was the arrival of the pandemic, which impacted a number of these high dividend yield companies, such that their dividends were either reduced or even cancelled. So the relative attractiveness of London stocks was reduced. Also, the London market is dominated by, slightly sort of mature companies, banks, miners, oil companies, and so forth, which are somewhat out of favour right now. Now, looking at the UK, obviously, Boris Johnson had an awful year last year. I mean, to be honest with him, I'll share with you quite openly. I've never been a great Boris man. but I think he's shown extraordinary grit, and to have, succumbed to a very nasty bout of COVID and to have turned it around and to have gone back to work and to have kept, handle on things, I think is impressive. And to give him his due, he did steer a course towards a deal with Europe, albeit one that we are still evaluating because we are still a little bit uncertain about the implications of some of that deal. And we've gone from what was called the transition period, which was from the moment we left to the moment to the end of the year, to 31st of December, into what I'm calling the adaptation period, in which we're trying to get our head around how it all works and whether we will be advantaged by the new dispensation or not. And as we know, there's all kinds of teething problems going on, shellfish exporters being stopped at the frontier, at Calais, people unable to take their dogs into Northern Ireland or whatever it may be. So there's lots which is going to be unpopular about this agreement, but it really depends if Mr. Johnson can pursue his vision of a global Britain in which we expand opportunities on all kinds of other arenas. And I think that to some extent, the outlook for Johnson and for UK PLC has brightened in the last month or so, both because of the vaccine rollout, which is, as we discussed, going well, but also because I think the country is beginning to regain a little bit of confidence, and there may be an end point in terms of the pandemic nightmare. On the downside, there's going to be a lot of drama in Scotland. I call it the Scottish play, and it will somewhat depend as to how the government handles that drama. Now, personally, I'm slightly more optimistic than I was at the new year, because I don't think that the SNP is going to win a majority of votes in the elections which are scheduled, the Holyrood elections, which are scheduled for 6th of May. I think they'll most certainly become by far the largest party. They may very well have a majority in the Holyrood Parliament. And I think, although I think the Conservatives will do better than expected, because they are now the principal unionist party. But I don't see how Ms. Sturgeon can argue for a mandate in favour of a second referendum if they don't have a majority of votes cast. So that's going to be the main political argument of the summer. The main reason why the nationalists want a referendum as soon as possible is that they want to strike at the moment of maximum unpopularity of both the Brexit agreement and the management of the COVID crisis, which is probably about now. But from here on in, I'm thinking that the level of satisfaction with the Brexit deal is more likely to trend upwards than downwards. And that, as I said already, at the end of the story, the government will be seen to have done as good a job as any government could have done in the handling of the pandemic, albeit with mistakes. The other thing that will weigh on Johnson's mind very much this year is the appalling fiscal situation in which the country finds itself, with government borrowing expected to be around the £400 billion mark for this financial year, which is totally unprecedented, particularly in peacetime. And at some point, that will have to be addressed. Now, there is going to be a budget on 3rd of March. I'm not expecting anything dramatic to come out of that. They're already circulating the idea that there will be a second budget, probably in November. I think that's when the tax rises will kick in. We can expect a reimposition of stamp duty and probably an increase in stamp duties on the purchase of second homes, which is just tiptoeing towards wealth taxes. In the UK, as it is, in terms of the taxation system here, we actually already have 3 forms of wealth tax. We have inheritance tax, we have capital gains tax, and we have property taxes. And all of those, I suspect, will edge up, even though under a conservative government, which is normally in favor of the accumulation of wealth. So my overall view on Johnson is that he's actually going to end the year in a stronger position than he began. Germany. It's Auf Wiedersehen, Frau Merkel. You know, she's leaving the stage. But will she? She's very popular. She's signaled several times her intention to go. A lot of people don't want her to go. A lot of people don't know who her nominal heir, Herr Laschet, is, and don't particularly admire his record very much. And it's very interesting. At a time when we have a green United States president, we have an incoming German chancellor whose main record in North Rhine-Westphalia was to increase the number of coal power stations. So he's a little bit suspect. And there's also this whole question about, you know, where is Germany going? The country experienced this extraordinary increase in productivity in the second half of the 1990s with the reforms undertaken by Gerhard Schröder and the reforms of the labor market. And it experienced dynamic growth, but neither growth nor productivity growth has been particularly impressive in the second half of Frau Merkel's premiership. So, of course, Germany will remain very highly committed to the European cause. But there's a lot wrong with Europe. And Euroscepticism in Germany is still growing. And if you look at some of the polls, they're not a million miles away from the Brexit referendum that happened in the UK in 2016, except that there isn't going to be a referendum on Europe in Germany or France because the political elites are too invested in Europe. France, well, very interesting. I think that Macron is going to pay a price for the poor rollout of the vaccination program in France. And he has a lot of storm clouds gathering on the horizon. And he has, in 15 months' time, an election to confront, a presidential election. So, you know, the popular wisdom is that the second round, you know, the French presidential system works in a first round and then a second round in which the two leading candidates face a runoff. And the popular wisdom is that it will be Macron versus Marine Le Pen, who is the leader of formerly the Front National, now the National Rally, as it's called, and her somewhat Eurosceptic right-wing views on immigration and public order and law and order and so forth. I suspect that we are going to be in for a surprise, which is that Michel Barnier is returning from Europe very shortly to re-engage in French politics. And he's going to be the natural candidate for the Republican Party, which historically was the dominant right-of-centre French political party, party of Chirac and of Sarkozy and so forth. And I think that it may very well be that Michel Barnier emerges as the president of the Republic in May 2022 with his very European agenda and probably taking France in a more prominent position vis-a-vis Germany on the European project. So it's going to be a very interesting year right across Europe.
So would you be a buyer of European equities then, Victor, with plenty of value on offer if we do buy into the value rotation argument?
Yeah, I think there are some good, I think there are some interesting stocks out there. I wouldn't go for the big, industrials. I would go for some of the, more up and coming tech stock, computer stocks. There are one or two interesting French enterprises doing things in terms of internet security and so forth. There are some opportunities, but probably not in the big lumbering manufacturing sector.
And just looking further afield, obviously China has been a big beneficiary, as it were, hasn't it, of COVID. Its relative position has improved dramatically.
Well, you saw the statistic. They've hardly been affected by COVID at all relative to the size of population. They're one of the few economies which managed to grow in 2020, albeit by a historically low level. I think it was 2%. But China is becoming a much more assertive entity, much more self-confident in terms of its geopolitical standing. It's building up its armed forces. It's, as you know, it's cracking down on minorities without any let or hindrance from any third party. And that's the point of my slide here, really. Because China has been able to get away with so much, particularly in the last year with the suppression of the Uyghur minority and also with the suppression of democracy in Hong Kong, which is now extinct, in total violation of the Sino-British Agreement of 1984. And because none of the Western powers have really stood up to China, my fear is that may embolden the leadership to go further and quicker than perhaps we thought. So just on this slide, it's probably not well understood that China has border disputes with every single one of its neighbors, with the possible exception of Kazakhstan, including Russia, by the way. And this rather tenuous alliance between Russia and China, which may or may not become a military alliance, formally speaking, in 2021, is not an alliance of equals by any means. China has 10 times the population of the Russian Federation and more than 10 times the size of the economy. So Russia is very much the junior partner. So the fact that there is an element, a strong element, a vocal element within China that wants to reclaim the territories conquered by Russia in the 1860s would give me pause for thought if I were Russian. If I were Taiwanese, if I lived in Taiwan, I would be very concerned because the level of rhetoric is just ratcheting up all the time. And then, there's these extraordinary initiatives to build artificial islands in the South China Sea, as far away as the Spratly Islands. These are direct threats to countries like the Philippines and Vietnam. So everything, will depend on whether the West manages to get together an authoritative coalition which can actually address China head on and draw markers here. And I think that may well begin at the G7 summit in Cornwall in June, when this so-called D10 of 10 prosperous democratic countries will be formalized. Over in Russia, the Putin regime is looking more exposed than possibly any other time in his 21-year reign as the president or prime minister of Russia. Now, the supporters of Navalny are relatively concentrated in the cities, and they're mostly younger people, but they're extremely vociferous, and they are very active consumers of internet information. And this video that Navalny has disseminated about Putin's palace on the Black Sea has had tens of millions of views and has actually impacted public opinion. I don't know if you've seen it, but I don't really know how it could be faked, because it's obviously not CGI or computer graphics. Somebody has released this video footage, and it is quite extraordinary. And the thing is that if Putin really wants to lock Navalny up indefinitely, or perish the thought, have him bumped off, there will be a price to pay for that, both in terms of internal opinion and in terms of external opinion. So I think we will see some disorder, some unrest in Russia, but the regime is so securely rooted that it's very unlikely that it will be that it will be dislodged. I mean, the point is that about, you know, I must be careful what I say. The office holders are all beholden to Putin in one way or another, and therefore they will not desert him at his hour of need. So, I mean, I think it could be sufficiently dramatic to spook the oil price at some point, but I don't think any more than that.
And moving on to the business end, the bit that everybody wants to hear about, sectors to watch in 2021.
I've said I'm very bearish on aviation, but I'm very bullish on space. And there are these three players in this area: Spacex, Virgin Galactic, and Blue Origin. Blue Origin being Jeff Bezos's outfit. They all have slightly differing technology. SpaceX and Blue Origin are able to launch satellites from reusable rockets, which makes the economics of launch fundamentally, you know, more advantageous. Virgin Galactic launches satellites from a conventional aircraft, which flies up to 40,000 feet and then releases a rocket. Now, the point is that modern satellites, in the old days, they were as big as small cars. Now you can have a satellite the size of a tennis ball. So the actual payload for launching a dozen satellites is actually much smaller, and therefore the economics of that have changed. Big Pharma, I expressed my view, and it's just my view. I mean, it's something I'm working on, I'm researching, that the coronavirus vaccine is not going to be a one-off program. It's going to be repeated, and that's going to put Big Pharma into a much more, you know, powerful position vis-a-vis governments. You know, the Labour Party ran in 2019 on the basis of nationalising research into pharmacology and you know, biotech. That's not going to happen. In fact, you know, we're going to be more beholden on Big Pharma than we were before this. But also look at the niche players. I mean, you know, BioNTech is only a couple of hundred people. It's a very small outfit, but with extraordinary technology and expertise. And they are going to be working henceforth for the foreseeable future on variations of the coronavirus vaccine and treatments for cancer, which arise from this extraordinary technology. I've also mentioned Oxford Biomedica in this slide. Hydrogen, I shared with you my view in the last webinar that electric vehicles are all very well battery powered, but they're not actually as environmentally friendly as people think. There are two main reasons for this. One is that it takes about 140% of the carbon emissions to manufacture an electric car as to manufacture a conventional car. So the more electric cars that you make, the more carbon emissions that will be reduced. And secondly, those batteries are filthy things. They're almost impossible to recycle. And the manufacture involves all kinds of unscrupulous, you know, environmentally unfriendly mining operations. So that's why I think that as time goes by, there will be more focus on hydrogen. And you know, this is still relatively in its infancy, because at the moment hydrogen is still expensive to make, but there are technologies coming on stream. I've mentioned a few players here which are looking at this. Next one, I think that flying taxis will begin to operate, possibly not this year, but by the end of next year. And this will be an extraordinary revolution, and you know, will initially be pitched at the rich, but eventually the economics of it will become favorable for for all. The German railway company, Deutsche Bahnhof, are already looking at rolling out flying taxi platforms at the major German railway stations. Now, this is slightly, you may think that this is slightly fanciful, but I think that the technology behind brain-body implants will advance very dramatically and quicker than we think. And they will manifest themselves in things like having a Fitbit actually, implanted in your neck, so which will just download your running metrics, James, when you go jogging, to a screen, and it will just produce the graphics for you before you even get back from your exercise. At the moment, the only person who's actually openly working on brain computer interfaces is Mr. Musk's upstart company Neuralink, which recently inserted a chip into a pig's brain. Well, I don't want to get into the ethics of that, but the point is that this is a field which is advancing very rapidly. And then something that struck me, digital authentication in the context of the pandemic. You've got the prospect now that by the end of this year, maybe beginning of next year, you will be able on your mobile phone to prove that you have been tested for coronavirus and that the test was negative. And there are all kinds of complications in terms of authentication and determining that it is actually you. But there are a number of companies working on this, of which Mvine and iProve, both British outfits, still private companies, but watch this space. And then there's a cybersecurity company working in this field called Darktrace, which is also going to be the subject of an IPO, as you'll see in the next slide, which is very exciting. Cryptocurrency, well, I think that the interest will remain. I know that when you find everybody talking about cryptocurrency, something is going on. It's not my thing because I just do not believe there is a valuation model. I think you may as well buy tulip bulbs as buy Bitcoin. That said, the fact that there is so much interest in this means that cryptocurrency exchanges, which permit ordinary people to buy and sell cryptocurrency, are going to thrive from here on in. And one of them is of course, Argo. Commodities, I'm not really a commodity specialist, but it's just interesting that commodities seem to be trending upwards, particularly industrial metals. And I just mentioned copper in this context. So that's one to watch if you are a commodity person.
And moving on to the next one, SpaceX. We've already touched on that, haven't we? Anything else on that, Victor?
I won't go on at length about this, but
not got a great deal of time.
Part of the reason why Tesla has powered away as it has is that it has this fascinating backstory that it's the sister company really to SpaceX, which is a company which has not only global ambitions, but literally galactic ambitions. And it's quite clear Musk has mapped out a path which will take SpaceX from near Earth orbit, launching satellites, to the moon, and then to Mars. And he's actually, produced quite a lot of information about this. And that is the direction of travel. And I think that SpaceX, when it finally launches, could be this year, I don't know, will be a stock to watch. I think it will become a must-have stock. And I think the whole story is hugely exciting. It's one I'm following closely. So finally,
IPOs, are we going to get an IPO renaissance in London, do you think?
Yeah, because the London market has been so dull and boring with all these sort of mature high dividend, low growth companies. As I said, the banks, the miners, and the commodity companies. This year, we will see some interesting IPOs in London. And I think that because we're looking forward, hopefully, to a rising market on the back of improved earnings data and improved dividend payouts, I think that we can be quite optimistic about the FTSE. And the fact that we will have some sexy technology companies emerging in the FTSE 250 can only renew interest in the market as a whole. And some commentators have been talking about the FTSE 100 reaching 10,000 once we get COVID behind us. I don't think that's going to happen this year, but my target would be somewhere between 8,000 and 8,500 by the close of 2021. So let's not overlook the London market.
Okay, good to hear. Right, okay. We'll just take a few questions before we finish. So let's have a look. Right. What are your forward views, Victor, on inflation, government debt, and further fiscal stimulus? And I take it this refers to the UK. And what are the implications for investors and the steps to consider now?
Well, for the moment, it looks like it's going to remain as business as usual with very low interest rates, which accommodate a very high level of government debt. Now, the real fear, the black swan, is that something will happen which suddenly spikes inflation and therefore interest rates, and which then hugely increases the government interest burden on the 2.2 trillion of pounds of national debt that the UK government is carrying right now. And the same applies to the US, $27.7 trillion of outstanding debt. Interestingly, the Fed has to refinance 8 trillion of that $27 trillion of debt this year in 2021. There's no reason why they can't do that relatively straightforwardly. But an idea I'm working on, I'm researching, is that sooner or later, the Chinese will want to impose a state-run digital currency on their country and on their zone of influence in order to bypass the dollar entirely. And I'm not going to go through the mechanics of that right now. I think it's very much in line with the surveillance society that they're creating. At the moment, Chinese citizens are not allowed to invest or trade in cryptocurrency at all. But when it becomes a state-imposed cryptocurrency, that could have all kinds of ramifications for the global financial system, one of which could be a sudden increase in inflation outside this cryptocurrency zone, and with all kinds of consequences. And if rates were to go to even 3-4% right now, basically for the UK and for other countries, the national finances would be blown out of the water. So that is a cause for some apprehension, I'm afraid.
A slightly related one, Victor. Any thoughts on gold and silver? Obviously, you've had quite a strong run lately, but seem to be sort of running out of steam a little bit at the moment.
Yep. Gold is obviously a hedge against inflation. Hasn't done particularly well this year because, maybe with that inflationary expectations edging up, we could see some firming of the price. Silver, I don't really follow it so much, but I saw some numbers recently suggesting that it's very much undervalued relative to gold, and there could be more upside there than in gold in the immediate or short-term future.
Somebody asking, will there be a commodities super cycle?
Um,
A lot of people talking about this recently.
yeah, I know people who believe in such things.
I suppose there are some good arguments for it, aren't there? Because you've got the obviously the move to EV, which is creating a lot of demand for a lot of minerals.
Yes. And by the way, most of those minerals, particularly lithium, cobalt, reside in mines which are ultimately under Chinese control, and other rare earth metals as well. A number of the mines in the Democratic Republic of Congo producing cobalt are under Chinese control. Mongolia is another country where some of these specialist components for battery technology are mined. So again, this is all very much tied up with the whole geopolitical story of the rise of China and how to contain China and how far China will go to disrupt the existing world order.
And a lot of people asking about what's the precise definition of value stock and which value stocks are of interest in particular. I know you're not a micro guy, Victor, you're more of a macro big picture guy, but any particular stocks that might be of interest at the moment in terms of the value side of the equation?
Well, it really comes back to those earnings models, doesn't it, that we mentioned earlier. And in terms of where you see stocks which significantly diverge from the market average, it could be that either the market has taken a negative view of them, or perhaps it doesn't fully understand the potential of those stocks. And there are some hedge funds which focus entirely on value. Others obviously focus on macro, and others focus on particular types of instruments. So I think, generally speaking, as interest rates or as yields rise, it's fair to say that there is a shift from growth to value, and that may be underway now.
Somebody asking about vaccine stocks. Is there any particular vaccine stocks that are worth looking at the moment, Victor?
Very good question.
And we've all heard of Pfizer and AstraZeneca.
I'm going to be doing some work on that very, very shortly. Of all the players in the vaccine stock space, you've got Sanofi, you've got GSK, AstraZeneca, obviously BioNTech, Moderna, Johnson & Johnson, which owns Janssen, which is the Belgian subsidiary which is working on a coronavirus. Quite a few others. There are also some interesting stocks in the field of animal vaccines, Meriel and so forth. They have actually performed very divergently, and they haven't moved as a pack at all. And in particular, AstraZeneca hasn't done as well as might have been expected. And one possible reason for that is that people have taken the view that the Oxford vaccine is not as efficacious as the Moderna or the Pfizer BioNTech vaccine. I don't know if you've, in Australia, I don't know if you've been following this, there's an argument about whether they will actually use the Oxford vaccine at all. And the truth of the matter is that we won't know until at least 3 to 6 months, probably longer, exactly how much immunity each of these different vaccines can stimulate. And then we can make the comparison. But I think that's a very good question. Why do some vaccine stocks perform so much better than others? Some of it is really sentiment. I mean, if at the beginning of the pandemic, you might recall a stock called Gilead suddenly started soaring because they had the rights to a drug called remdesivir, which for a while looked like a possible cure for coronavirus. In fact, it was nothing of the sort. And the Gilead stock has fallen off quite considerably. there are also issues about the ability of vaccine producers to deliver at scale and in quantity on time. And at the moment, from stuff I've been looking at just this week, it looks like the UK-based facilities of AstraZeneca, part of which is the Oxford Biomedica plant, actually are more efficient than some of their European equivalents. So that's why I have a very positive outlook on UK biotech and pharma.
Victor, I think I'm right in thinking that we'll be hearing more on this from you tomorrow. Is that right? You've got a piece coming tomorrow about vaccines? I'm
talking about mutations tomorrow, yes.
Right, okay. And I think we'll leave it there because we've already overrun slightly. So I'd just like to say thank you to everybody for listening to us, and thank you, Victor, for taking the time to speak. And
thank you, James.
Don't forget, everybody, you can sign up to the newsletter at masterinvestor.co.uk and you'll get all the updates on any future webinars. And thank you very much and take care.